The sterling rose towards a 7-year high against the euro yesterday, as strong manufacturing data bolstered robust private sector surveys last week. Today I have on the line Jarratt Davis from Smile Global Management in London. Jarratt, were you expecting such strong results?
No, not really. We expected the figures to come out actually lower than they were previously, which is what happened. But basically, what we were expecting this week was the focus to be all on the inflation report. We thought that the market would be keenly focused on what the Bank of England was saying on their inflation report. So when that data came out positive, we are expecting a hawkish surprise from the inflation report. So when that data came out positive, it wasn't so much the data, although that was, kind of gave a good solid grounding for the UK recovery, but it was more to do with the fact that we were expecting a positive week for the pound overall, and that data was kind of like the cherry on the top, which got the pound moving and the market positioning themselves ahead of Thursday.
And staying on the topic of tomorrow's inflation report, can you tell us a bit more about what you are expecting to see?
Okay, yeah. The inflation report tomorrow from the UK is a very interesting one because basically this year we've had about 17 central banks that have gone down the road of easing, which means cutting rates and turning to a more dovish stance. The Bank of England are one of the only banks, along with the Fed, there's only two really, major central banks I'm talking about, that are actually still potentially looking at hiking in the next 12 months. So the importance of this inflation report is we want to look at what the tone of the Bank of England is. Now, we know that they think deflation could happen. We know they expect inflation to keep falling lower based on oil. But their current stance is that this is just temporary and it could actually be a good thing for the UK economy because cheaper energy prices will spur growth. So actually it could be a good thing overall. So what we're looking for is if the Bank of England maintain that tone, and also if they say that they are continuing to focus on the jobs data and the labour market, in particular average earnings, if they continue to focus on that, because average earnings has actually been booming the last few weeks, last time round it improved significantly, then basically what that will tell the market is they're not concerned about inflation, they are focused mainly on jobs data, and that jobs data is improving. So basically the market will take that the bank are still in line to hike, they're still on that path, it might take a little bit longer, but that's still where they're going, which basically puts them completely opposite end of the spectrum of every other central bank. And based on that, we expect the pound to increase in value against pretty much every other currency across the board.
Greece is the main topic of discussion at the moment. What are the main risks for the UK if Greece exits the Eurozone? And do you share Cameron's concerns?
Well, I guess basically the main concern really is there's two real concerns for the UK at the moment, but one from a currency perspective and one from an economic. So if Greece leaves, the main concern is obviously this will cause a contagion effect. So, if Greece decide they don't want to pay their debts and they just leave the Eurozone, that basically opens up an exit door for other countries. So, think of the main contenders, Portugal, Spain, Italy. Those other countries, there are other countries that are struggling, that are obviously paying back debts. And if there's an exit door there, and it works out for Greece, and it seems like the easiest way to go, if everyone does it, it could cause like an effect where basically you have a situation where the euro kind of, topples in on itself, which of course is bad economically for the UK being one of the biggest trading partners. Now, the other side to that comment, particularly on a currency perspective, is the value of the euro, really the value of the euro, if that happens, will completely fall, which is bad for obviously UK exporters because the value of the pound will go up. Okay, so you've got the Bank of England, if they do maintain their hawkish stance, you've got the euro area collapsing, the value of the relative currencies will go in opposite directions, which of course is a really bad thing for UK growth and could actually send us back into another recession. So I do share his concerns to a degree, and they're the two risks that I see really from the UK's perspective.
Jarratt, as always, a pleasure. Thanks very much for coming on the show today. Viewers, do stay tuned. We have plenty more heading your way. Bye for now.